Good day, students. Miss Thomas here again. Hello. We are now in the options section of the CSEC syllabus. We have finished or completely covered the communication topic, and now we want to move on to consumer affairs. Remember, in the option section, you have 3 topics to choose one. You have consumer affairs, communication, and tourism. So thus far we covered communication, and now for the next few weeks, for the next few videos, we will be doing consumer affairs. Again, I'll be trying to make these videos very short, so we'll dive right in. So, consumer affairs. Who's a consumer? What affairs are we talking about? The consumer is any individual or institution that uses goods or purchases goods and services. You are a consumer. I am a consumer. Anytime you go to your canteen, you are a consumer because you're purchasing a goods from the canteen. You go to a shoe store, you go to a cinema, you go to the grocery, you go to the gas station, you are purchasing goods or services. So you are a consumer. We are all consumers. Institution, big businesses can be consumers too. Take, for example, a hospital. A hospital, they feed people, they feed patients. Where do they get the food stuff from? They have to purchase it from farmers or groceries. They have to purchase medical equipment to service all the patients. So institutions as well are consumers, not just individuals like me and you. Institutions as well are consumers. We are all consumers of goods and services. Some example of goods are, just take a look around in your room where you are right now. One of the goods that you might be using is viewing this video on one of the goods that you purchased or your parents purchased, a laptop or a phone. Some of the goods that we use are food stuff, clothing. Look around your room, there are chairs, desk. All those are goods that were purchased. We have books, tools, anything that you go to the store and purchase and you get something in return for the cash that you put out, that is a good. And then we have services. Services might be things that you could touch, like a piece of clothing or a shoe, but it's still something that you have to pay for. So like banking, you pay for services at the bank. Insurance companies, you pay for insurance services there. When you pay taxi driver for carrying you to and fro, that service that he's providing, you're paying for that. Medical attention that you get at not hospitals in Trinidad, but when you go to the doctor's office, that service that he offers, you pay for that. So we are consumers of goods and services. Now, how do we go about paying for such goods and services? Because it's not free. You go about paying for such a thing by cash or by credit. So now, cash, of course, involves using actual dollars, cash in hand, cash out of pocket to pay for your items. So you go to your canteen, you take out your money, actual cash, and you pay for the good that you want. There's also another way that people pay for goods and services by credit. Credit is getting an item before actually paying for it. Right? So many times there are especially big ticket items, high price items like houses and cars and major appliances. Many times most persons may not have cash out of pocket to pay for such a thing. So they go into some credit arrangement with the seller and they get their items without paying full price for it as well. So now we'll just talk about some of the credit arrangements that consumers can use with, or that's available to consumers. These are some credit facilities that are available to consumers. So again, credit is acquiring things before actually paying for them. Example, houses, cars, appliances, many things. So most times when somebody wants to acquire a house, they may have to take a loan, a personal loan. So you approach banks or credit unions or any lending agency, and they would give you a loan, and that particular loan is called a mortgage. Mortgage are long-term type loans for particularly houses or really, really high price items. Now, when you go to acquire such a loan, you, the consumer, and the lender, like the bank or the credit union or any mortgage company, you enter an agreement on how long you will take to repay this loan. So they will give you the money up front. You go, you pay for your house. You have your house. You go to the lending agency, they give you the money up front, and you go and you pay for your car or whatever big ticket item that you're paying for. You make an arrangement with the lender on how much you're going to repay monthly or weekly or fortnightly, how long you're going to pay, like how many years it will take to repay this loan. Because again, they're not just giving you money. You have to repay this personal loan. So that is one way, one credit facility that persons have to acquire items. Another way is through credit cards. Credit cards are cards that are issued by your financial institution. So you want a credit card, you go to your financial institution, apply. Once you qualify, they would give you a card similar to your debit card, small plastic card that has a credit limit, meaning that you can't spend more than what they allow you to spend. Right? So your financial institution may say, you know what, you can only spend $5,000 on this card. So we'll give you a credit limit of $5,000. Anything beyond $5,000, your card will be declined. You won't be able to spend more than $5,000 unless you have a special facility called an overdraft, but you don't need to get into that here. So a credit card is a card that has a credit limit on it, and you are able to use that card at different points of sale. You go to any store or anywhere that accepts cards, and you swipe that card, and the money will automatically come out from that credit facility that they give you on that card. And of course, you pay that back monthly as well. Those things have interest charges on them, so be very careful with credit cards. They are one of the easiest ways you could get into debt, real financial debt, because we as humans, we want this, we want that, anything shiny, anything dazzling, anything new. We just must have it. So your key is to reduce your must having it. Try to reduce that, delay having nice new shiny things, or just not have it. And you won't, because if you end up in a lot of debt, of course, that creates a lot of frustration and unwanted frustration that you don't need. So be very careful when you do get credit cards, students. Remember that it's one of the easiest ways to get into debt. Of course, another way is hire purchase, another credit facility. The last one that we're discussing today is hire purchase. Again, you go into, especially for appliances and so on, you go into appliance stores. We in Trinidad, we have Courts and we have Standards and we have Unique and different stores that sell items for the home that are expensive and you don't have the cash for it. You enter another arrangement with the store, and you pay a down payment on the item you want. Say you want a fridge, you pay a down payment on the fridge, and of course you didn't pay all, so there's money outstanding. You make an arrangement with the store to pay that outstanding payment, again, monthly, fortnightly, or weekly, for the next how much years, weeks or months or years, right? So you pay your down payment and you actually get your item to carry it home. And you make an arrangement with the hirer, with the store, to on how you would repay that, how you would repay for the fridge or whatever item that you took out, right? So also note with that is, when you take something out on hire purchase, you, at the end of the day, say if you take 2 years to pay it back, you're actually paying more money than if you purchase the item cash. So if your item, because they charge interest on these on this loan facility, they have to make a profit. So if you buy something cash for $1,000, if you buy that same item on a hire purchase agreement, you might end up paying $1,500 at the end of the 2 years, or almost double the price, $2,000 even, depending on the agreement that you have, right? So also that's something to be careful about too, because if you could buy something cash, that may be advisable, but of course this is your decision, right? And what you could manage and what you could handle, because remember, all of us, we don't have cash in hand to pay for things outright cash. So we are all consumers. We are all consumers of goods and services, and there are different ways we pay for such goods and services, either by cash or by credit. The 3 forms of credit that I just spoke about are loans, as an example, the mortgages, which is a long-term loan, and then of course you have credit cards and hire purchase, right? So that's it for this class today. I will see you in the next video. Take good care. Bye.